Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. The Reserve Bank of India is set to announce the monetary policy today, even though the rates are widely expected to be kept unchanged. Markets would be keenly listening to the governor's speech to identify tones of hawkishness, especially his views on the agri inflation, which has been under pressure. On the global front, we have the US CPI again, something which can cause markets to move. And if you remember last time round, this number had come significantly lower than expectations, leading to broad-based dollar sell-off. Today, it seems, however, markets are expecting a pickup in the headline CPI numbers. Good morning, JK. How are things looking ahead of these two market moving events?
Good morning, Swaraj. After 3 days of lull, today we have a double whammy of events, and that should keep the market somewhat busy. Although the seasonality is dictating that rangy scenario can continue broadly, particularly in the currencies. First up, we have the RBI meeting in a little over 2 hours, little under 2 hours time, and we had the last meeting 2 months back when conditions were a lot more benign. We saw almost a status quo on the policy and the forecasts, and very little market reaction was there. We are now in a quite a different situation. We had a rise in domestic inflation in June by 50 basis points, and the upcoming CPI for July is expected to jump by as much as 200 basis points as per some forecasts. And this should call for some action from central banks, definitely, either through liquidity, policy stance, or even a policy move itself, which cannot be totally ruled out, according to me. After all, the food inflation is likely to persist as we head into the festival season in the coming months, and the uneven monsoon is already having its impact on the crops. On the contrary, global situation has become more benign, with the inflation showing a decline almost in all the major economies, and countries like Europe and US are possibly near the peak rates. Now, more specifically, do we expect a policy rate hike? And that would obviously be more surprising to most people. I can only think of two factors in this regard. The outlook on inflation, if it gets revised up, central bank may well act preemptively. The fact that they went on a pause for two meetings should not stop them from acting. After all, recently we have had two central banks retracing their pause after inflation reared its ugly head. The other factor to consider is, if current forecasts prove right, inflation will be above the upper tolerant level of 6%. Now, unless there is good reason to think that this is only transitory, it cannot be ignored. The rising global crude prices, 26% rise from early June, and more gains not ruled out, will add further to the inflation. To cut the long story short, I will not be totally surprised if there is a rate move by RBI today, but definitely I am in the minority. On the markets itself, we had very stable markets recently, with USD INR trading in 1 rupee range, and benchmark 10-year yield trading in a tight 8 pip range. This scenario may well continue even after the policy, though short term there is some pressure on INR due to outflows. And the stock index in India has risen 8% since the last policy meeting. But we have indications that the market is likely to get more volatile, with greater influence coming from global cues and also the domestic inflation influencing some sort of a policy response. Very near term, on the overnight, long end yields in US moderated substantially, as we had a surprise good reaction to new issuances. The 10-year auction yesterday drew solid demand from investors. A coupon set below 4%, and that's a very significant thing. And that really led to 30-year and 10-year yields fall substantially. In fact, from the recent peaks, 30-year has fallen by 17 bps, and 10-year yield has fallen by 19 bps, and a testimony to investors' belief in rates peaking and wanting to grab yields above 4%. Now, markets are also contending with two contrasting scenarios on the global front. We are possibly starting to see, some sort of basing in the US inflation, while we have China reporting a big fall in the overall inflation. And both are equally important for the global economy. In US, of course, the headline inflation is expected to inch up slightly, but the hope is that the core inflation will come down, and that could be some relief for the policymakers. In fact, even in India, while the headline inflation is expected to massively rise, the core inflation might possibly be down. That could be some mitigating factor for any sort of a strong policy move. In the US, the core inflation can get influenced by the falling, rentals, which normally has a lag effect. More specifically on the markets yesterday, on stocks, there was some, renewed sell-off, but that is more due to investors playing caution card ahead of the CPI data tonight. And it was only a modest loss, although in some European market, there was recovery after the Italian government retraced its earlier rule of a 40% tax on the windfall profits by limiting it to 0.1% of the total assets held by the bank. Now, on the rupee itself, we continue to hold above 82.80. Now that's a development that cannot be ignored. At the same time, we are also holding in a very tight range, at least in the onshore market, not breaking 82.85. We continue to see some outflows which can keep the pressure up on the rupee. Maybe some influence from the policy also can be there, but not very much. We are essentially down to how the flows are in the coming days and what the RBI does on the rupee front if it starts to weaken towards 83. All in all, we wait for two big events for the day, and then wait for India inflation on Monday. Thank you.
Thank you, Jack. And rightly said, after some sort of a lull period, we are having two major back-to-back events. RBI monetary policy today at 10 a.m. Last meeting was 2 months ago with conditions, as JK mentioned, some more benign, and we did not have any major market reaction to the RBI policy. But now we have some food inflation and the festival season coming up, which RBI will pay heed to. Remember, we had two central banks come out of a pause because inflation came higher. I'm speaking of Australia and Canada. But if inflation forecasts come higher, maybe more than 6%, which is the upper band of the inflation target, maybe there is a small probability that there is a possibility of a rate action. US yields moderated with good reaction to new issuances. 30 and 10-year yields fell. This is because investors are believing in rates peaking, which has led to good amount of buyers to these new issues. When it comes to US inflation, we have been observing some pacing, and the hope today is that the core inflation comes down, which has been quite stubborn. When it comes to rupee, we continue to hold above rupees 82.80, and especially on the onshore market, we are trading in a very tight intraday range. That's it from us today. Tune in tomorrow as we decode both the RBI monetary policy decision as well as the US CPI numbers. Thanks for listening.